A bank customer goes to the bank and he's looking for a loan. And so he's talking to the banker, says, banker, I'd like to have a loan, some 10,000 rands. So the banker says, okay, just I'd like to understand more about your personal budget. Can you break down for me your budget? So the customer says, well, 40% of my monthly salary goes into rent. Another 40% goes into food and utilities. Then 20% goes into transport. Another 20% is for school fees for my kids. And the last 20% is for my entertainment. So the banker says, well, but that adds up to 140%. What's the problem? He says, exactly, that's the problem. That's why I'm here. So we're going to look at the risk side of mobile money. I'll begin by looking at the trends of mobile telephone in Africa, and then we'll look at how we can utilize those infrastructure for the new drive of mobile money. And then we'll look a little bit at how we can expand the mobile money markets, some of the 3 or 4 things we can do. And then we'll look at how Africa can be compatible with the global trends in mobile money and why we need to do that. And then finally, we'll look at security controls. So the growth and evolution of mobile telephone in Africa has been dramatic. If you look, in 1998, only 2 million people in Africa had phones. But over the period, numbers have dramatically gone up. For example, we had a jump of 550% between 2003 and 2008, jumping up from 54 million subscribers to 350 million subscribers over a period of 5 years only. And 2 years ago, we had reached the mark of half of the population in Africa having mobile phones. And actually, some of the countries in Africa already have more than 100% penetration, like Gabon, Seychelles, and here, South Africa. I know these are 3 of the examples where they've reached more than 100% penetration of mobile telephony. Currently, we have about 650 million subscriber base in Africa. And by the end of this year, projections are that we'll have 735 million Africans connected to mobile telephony. So it's important to go into mobile money because already we are in an industry which is dramatically evolving and improving all the time. From the economic context, the mobile or communication sector generates quite a good chunk of the Africans' GDP. A good 4% of the GDP in Africa comes from mobile communication sector, which is about $56 billion. And studies by World Bank indicate that for every 10% increase in the mobile telephony industry, we get 1% increase in the national GDP. My own country, Malawi, is an example where, due to the rapid growth in mobile telephony, our GDP has been doing pretty well in the last 4 or 5 years. And in terms of employment, on the order of 5 million Africans are connected or direct or indirectly employed by this sector, including myself. I'm a beneficiary of this as well. Now, these are just some of the highlights of the trends currently. I think most of us have heard of the 3G or third generation of mobile telephony, which is helping us to have internet on the mobile and things like that. People are now, or most of the mobile network operators, are expanding the geographical spread of their towers. Many are concerned with quality of service to ensure that your mobile is always working and working with good quality. And then we're beginning to see convergence of banking and telephony. And mobile money is one example where the mobile industry and the banking industry are working together. And then in South Africa, I think that was year 2008 or so, when you had the compulsory SIM registration, where everybody has to register their name, linked to what SIM and SIM card and number. We're seeing that, and that's aiding with mobile money, because with mobile money you need know your customer, KYC. And so in the countries where SIM registration is compulsory, it becomes easier to do the mobile money. Unlike a country like Malawi, where now we're beginning to register people doing the KYCs and all those things. When you already have that, it becomes easy. And then we're seeing a lot of partnership between the big companies like Vodafone coming to Africa and partnering with smaller network operators. And that will have bearing when we're discussing compatibility later on. collocation of sites. 5-10 years ago, every mobile network operator had to put up their own tower, and you'd see a tower for MTN next to Vodacom and next to Cell 3 and 3-4 towers. Why not just have one tower and then different antennas for the different operators? So we're seeing that. The only next thing we need to see maybe is to see the translation of those cuts in the cost to the subscribers, because obviously it means the amount of money spent is reduced. Soon we'll be seeing the 4th generation of mobile telephony coming into play, and that will dramatically improve the speed by which we can browse on the mobile. Now, to the main topic, mobile money. Over the last few years, we've seen a lot of companies, either through the bank-based or mobile network operator-based, launching their mobile money solutions. And as has been repeated over and over again, Kenya is a leading case study, or indeed a model example of how mobile money can work. People talk about M-Pesa, all the time. We know that over just 5 years, M-Pesa mobile transactions per day have overtaken the number of transactions in the bank. Just from launch, within 5 years, they overtook the banking transactions, which have been built over a century or more. As we talk now, about 9 million Kenyans are transacting all the time in mobile money. And last year, the number of transactions jumped by 60% over the previous year. In terms of money, we're talking of a jump from 732 billion shillings to 1.17 trillion shillings. Or if you like in dollars, $14 billion was transacted last year through mobile money in Kenya. In Malawi, we just launched, I think 2 weeks ago, Airtel Malawi launched our own mobile money product. It's the first in the country, and we're hoping to see the same kind of dramatic growth. Now, how can we increase this kind of market? There's 3 or 4 simple things that we can do to increase this. First of all, we've seen that about 50% of Africans are connected to mobile telephony. It means there is still a big opportunity to expand further into the other half. So we still need to continue to spread the network across to the remaining half of Africans. And then secondly, we need to ensure that we push the mobile money into shopping. A lot of the mobile money usage is money transfer, or sending money to my father, to my brother, my cousin in the village or even in towns. Also buying airtime on the mobile. But we want to see more of that being used for shopping. So I can take my mobile handset into a shop and pay for my goods there. So even 4G we talked about is already being geared or tuned up for usage in terms of mobile shopping. So I think when that becomes a standard way of shopping, we'll be seeing mobile money adding more value to people's daily lives. The second way in which we can increase the market is by ensuring that we have interoperability, by which I mean across banks. So I shouldn't just work with one bank only on the mobile, but across the different banks. I can transfer money from maybe from Netbank into Barclays Bank or into Standard Bank, but also across networks. I should be able to transact from network to another, and much more importantly, across countries. So as I've come here in South Africa, I should be able to still do mobile money transactions. Currently, only a few of those products are able to do that. Most of them are just in-country. So hoping that that will help, and that's why we'll be talking about compatibility very shortly, to see how we can unleash this kind of potential. And then finally, we need to begin to see value-adding services coming on. For now, it's just having mobile money. I'm able to get money onto my mobile. I'm able to do basic payments like utilities and send money home and buy units. But we want to see value-adding services. I gave an example here of maybe mobile credit. So I should be able to get, as we do with the credit cards. So I can pay. I can have access to money now and then pay off later. We're beginning to see some things like that on the normal mobile products, but not in terms of mobile money. So I'm hoping some clever people out there will do these kind of things shortly. I have hinted on the issue of global compatibility. Now we want to dwell on this. First of all, why do we need compatibility? Or first of all, maybe, what is compatibility? By compatibility, we mean that two systems should be able to talk to each other seamlessly. They should be able to connect. So if we have mobile money in South Africa with the Vodacom, maybe you should be able to deal with T-Mobile in the UK, for example. For you to be able to interoperate between T-Mobile in the UK and Vodafone here, you need the systems which are able to talk to each other and are compatible to each other. So why do we need that? First of all, on the order of $40 billion is remitted to Africa by diaspora Africans and people like that. So there's a lot of money out there that is coming into Africa, and if we had mobile money interoperable, it means it will make it much easier for them to do the remittances. Because sometimes people go for short trips, or they're using their odd number, and also they have multiple SIMs and things like that. Also, there's a question here, maybe even donations, especially at micro scale. You'd be surprised how much money comes into Africa, into not just from World Bank and IMF, but from the small families or communities. I know I work with the Scottish NGO, and I know how much money is coming into Malawi from small communities and people to schools and things like that. So maybe this will be one good way in which mobile money would also add value. And then finally, strategic partnerships. We talked about how the global companies, Vodafone coming into Africa, pairing up with small mobile network operator. So if our systems here are already on global standards, it means partnerships will be easier because our systems are compatible with the systems on the international market. Now, how can we be compatible? I've looked at the three standard ways of looking at technology. First is the people. We need to have well-trained people in Africa, and we must continuously develop them to world standard so they're able to practice the global standards and therefore make our systems compatible with the global practices. And then within people, of course, work ethic must be the same as well, complying with global standards. And then on process, I think it's important that we have the global standards of operating mobile money, including compliance regimes, how we manage change, must follow the international standards. Even business continuity processes. Do we have disaster recovery plan? What happens when we're doing change? What happens if our database is crashed? Do we have anywhere we can recover these? And once we do those, then we are going to be compatible with global standards. And then finally, on technology side, we must be using fit-for-purpose technology and continuously evolve with technology. We cannot have the same solution for 5 years. Every 2-3 years, we need to make a major upgrade of the system. So this fits also into the business case. When we're making a business case, we must plan that the technology we're buying now can only be with us for about 3 years. We'll have to reinvest by that time because otherwise we'll be behind times. Now let's focus on security. Basically, information security in technology is about ensuring that there's no abuse or unauthorized access to our systems and no unauthorized destruction or modification of data. So data should not be changed without authority, but also should not be destroyed. And only people who have authority and approval to access data or information should access that data. So there's three ways in which you look at information security. First is confidentiality. In mobile money, we have to make sure that we have total confidentiality because now it's basically almost like banking. You can imagine if a bank, everybody knows how much money goes into your account, what transactions you made, immediately you lose trust. I think one of the earlier speakers mentioned about 3 things that customers look for. He mentioned trust, price, and something else. So trust is very important there, confidentiality. And then secondly, we need to ensure data integrity. So data should not just be modified by anybody anytime, because when they do that, if we want to go and check maybe a case where a customer is complaining that their transaction didn't go through, data has changed, we can't get those details. But also, it may make the system unstable if you don't have proper controls in who changes what. So that fits also into system stability. And then thirdly, availability of our data Data is of no use unless you can get it when you want to have the data. So, we need to have mechanisms where data can always be available, and some of them are business continuity plan, have a rigid plan that tells us how our systems will always be there, how we'll always be able to access data. Even when the primary system crashes, there's a secondary system where we can recover the data, and that's why we're talking about DRP, disaster recovery plan. So if our system is here in Johannesburg, maybe we have redundant systems in Natal or maybe in Cape Town or even abroad perhaps. So these are the three things we need to think about. I want now us to dwell on data integrity. In the interest of time, we'll not go into all the details of the other ones, but just data integrity as an example. So as we mentioned earlier on, data integrity is about ensuring that data cannot be modified without authorization, and you must clearly define who should change what, who should have access to what system and what data. And all the characteristics of the data must be clearly defined. This data was stored on this date. This is the person who can access it from this system, and always checking so that the auditors, when they come, the IT auditors are able to check the policies and compare with the practices that indeed your data is integral all the time without violation or compromise. And very importantly, audit trails, especially for mobile money. Everything that is done on the system, there must be an audit trail, and that audit trail should not be deleted. Because there comes a time when you need to know who did what on the system. I remember when I was in college, a classmate of mine had found an internship with a mobile network operator, and when we came back from holiday, he asked me, he said, "What did you notice with your mobile phone?" I said, "What is it?" He said, "Did you notice that you're anything with the airtime?" And I remembered that for about 2 weeks, every morning, my airtime balance was resetting to $100. So I thought there was a system error with the mobile network operator. And obviously, as a good customer, especially as a student, I didn't have to volunteer to report. So every day, it was setting to $100, and I was using that, not knowing that my classmate at the network operator had found the passwords for all the different people, and he got into the system and he was distributing units to his friends. So this is a key example where audit trails will help you now to trace who did what. If you have audit trails, you know that it's this gentleman who did this. Because later on when the issue grew up, he even went to the system to delete all the numbers he had called from his phone and all numbers that called to his phone. But that's the only way they're going to know that it's him who gave the units to us, because they knew the mobile numbers which had got the airtime without paying for them. And from there, they could link with who talks to those numbers. But he deleted all that information. So you can see there the link between need for audit trail, but also data integrity as such, as we mentioned, shouldn't be changed without authority, shouldn't be modified without approval. Defense in depth is another major attribute of security for data. This is borrowed from the military, but in technology, we're talking of three main ways. First of all, administrative controls. We have policies and procedures. You follow the regulators' standards, like central bank will have standards on how you ensure that your data is secure. But also logical controls. These are mostly technology, so the things like passwords. You encrypt the data so that if somebody even finds the data, they cannot read it unless they have the encryption key. But even on the network, you have the firewalls, and also you have the virtual private networks, so that if I'm connecting, if I was giving support to mobile money in Airtel in Malawi, I should be able to access it from here through a virtual private network, meaning I'm connecting there, but no one else can tap into the connection from here where I am to Malawi. And then, most importantly, physical controls. Not everybody just go into the building anytime. I'm impressed with the kind of physical controls we have right here at this conference. You know, coming into the hall, we're having the badges here, the security officers on every door. So those kind of controls are very important even for mobile money. The data center, not everybody going in there. There's CCTV, there's biometric access, and then following all the IT procedures for access. Another important attribute for ensuring security is that right in the beginning, we need to fully know our customer through the KYC, which is standard practice. There will be standard forms, they fill in their name, their address, their age, gender, and things like that. And then, very importantly, we need to monitor transactions all the time to check for anything that may be a bit strange or something that is suspicious, so that fraud can be detected much quickly. I work in the mobile telephony industry, and I know if you miss 2 hours, 3 hours, you can lose a lot of millions. And so in mobile money, it will be the same. You've got to catch things quickly. So real-time monitoring is very important. The good thing is these days we have technology which can help you to monitor things and trends. So it's good to employ those applications which will help you to always monitor for exceptions. And then they come up, and then you look into those issues and quickly close. Then data reconciliations. At the end of the day, we know in the banks they do the data reconciliations as well. So mobile money also is important. At the end of the day, reconcile all the accounts and everything balances out so that you don't carry over big problems into the future. And then finally, very important again, transaction controls. It's a standard practice for mobile money that there must be a limit on the amount of money per transaction. Like in our case in Airtel Malawi, it's I think 60,000 kwacha, which is like 3,000 rands per transaction. And the number of transactions per day, in our case, is 5 times. So you can only do 5 times 3,000 rands, which is 15,000 rands per day. The importance of this is people cannot then abuse. If somebody has, maybe they have a racket of some millions of rands and they want to, push the money around and clean, as they say, clean the money, they cannot do that because you've limited the exposure. So it's important to limit the exposure that way. So in summary, the case for evolution of telecoms in Africa is very clear. Our job is to latch onto it. And we can see that 50% of people in Africa are already connected to the mobile technology. We should now use the existing infrastructure to grow mobile money. And we've seen strategies you can use to expand mobile money market. And we must be mindful of the need to align with the global standards, including security, disaster recovery, change management, compliance, and all those practices, so that we are able to interoperate with other players in the world. And if we do that, then we'll not only make profit today, but also tomorrow, and therefore we'll sustain our profitability. Thank you very much.